to this pre-budget panel discussion presented by PwC in association with the Economic Times. I am Deepika Dhanda. The countdown has begun for Union Budget 2023 to 2024, which will be presented by Finance Minister Nirmala Sitharaman on Wednesday, February 1st. As the last full budget of Narendra Modi government before the 2024 general elections, Budget FY24 is keenly awaited by all stakeholders as it's expected to lay out a blueprint for steering India's economy towards a sustained growth path over the next 25 years to India at the rate 100. To decode what's needed to catalyze key pillars of the Indian economy amidst the backdrop of an ongoing global slowdown, and to deliberate on expectations from economists and industry experts, we have with us Mr. Sachchidanand Shukla, Chief Economist at Mahindra Mahindra, and Mr. Dwaraknath, Partner at PriceWaterhouse. Together, we'll deep dive into the roadmap for spurring growth for India, in particular its manufacturing, digital, and innovation economy. We'll also hear from them on their views on key priorities for the government in enabling ease of doing business and ensuring sustainable growth for the domestic economy. I want to start off by asking you both about what you think should be the overarching priorities and themes of Budget 2023, given that it's the last full budget before the general elections, especially amidst a slowing global economy and muted outlook, inflationary pressures, geopolitical tensions, and macro headwinds.
Thank you, Deepika. I think you started off by pointing out that the global scenario or the backdrop is challenging. Let me add that it is quite dire in the sense that some of the problems that have really plagued the global economy, including the Indian economy over the last 2 years, which is the pandemic and its after effects. And second, the geopolitical or the geoeconomic problems, including the ongoing war in Ukraine, I think they still continue to persist. And therefore, I think most of these challenges this calendar or fiscal year 24 are likely to remain external, right? So global economy, geopolitics, all of these. And therefore, this is the setting or the context for the budget. I think, therefore, what becomes very important or critical for this year is we need to exercise fiscal restraint. What that will do is it will lower inflation. Right, it will lower the burden on the RBI, which has been fighting this battle over the last, say, 9 to 10 months. And that will also support real income. So if inflation goes down, the real incomes in the hands of consumers go up. So it sounds slightly tricky. And very often we find that most people argue for something from the budget every single year. What I'm arguing is fiscal restraint. They should lower the fiscal deficit this year and commit to a fiscal consolidation path over the next 3-4 years. The other thing that they need to do is continue to focus on public capex, right? So PLI, public capex. And lastly, they should not really rock the boat in any which way, right? Given the kind of dire situation the globe is facing, we should not rock the boat by doing anything which is very fancy experiment. You saw what happened to the British government, the UK government. They could not even outlast a lettuce leaf as you saw, right? So therefore, I think given the kind of backdrop we are in, it should be a non-negative budget. So I'll stop there and back to you.
All right, over to you, Dwarak.
Yeah, so thanks, Deepika. I think from my perspective, the overarching theme has to be stability, like Dr. Shukla pointed out. I think definitely stability has to be the overarching theme. But if I look at it from a tax standpoint, what does that really mean? And there are 3 themes that I would categorize that into. First and foremost, and this sounds a little hackneyed, but reducing litigation and tax certainty has to be absolutely top priority for the government. Some of the initiatives they've taken, such as the bar, etc., haven't really taken off. So it's going to be important for the government to send a strong signal about reduced litigation and tax certainty. Second, they have to continue the path of digitalization and simplicity. When I talk about digitalization, I'm talking about digitalization of the administration. Again, they've taken a lot of steps over there, but there have been hiccups. and they need to continue down that path. They need to ensure that those hiccups are ironed out. Third, we have to ensure that our taxing system starts aligning with some of the developments which are taking place globally. What do I mean by that? Today, you have the OECD and the G20 going with Pillar 1 and Pillar 2 and the initiatives surrounding that. I think the government has to give a path down that. Second, there is anti-avoidance, and that's again a big mantra across the world. The government has taken steps on anti-avoidance, but greater clarity surrounding that. And third, within that, we talk about tax treaties, how those tax treaties are going to be interpreted by the Indian government, especially when companies are more and more transnational in nature, and the kind of transactions we're seeing more and more across border, I think are very important. So from my perspective, those are going to be the three themes: tax certainty and litigation, digitalization and simplicity, and aligning our taxing system with what's happening across the world.
All right. The government has set an ambitious goal of making India a global manufacturing hub. Schemes such as the PLI scheme in key sectors and the global China Plus One policy have helped ramp up domestic production and foreign investments. Still, with India looking to boost the share of manufacturing in the country's GDP to 25% from the current 15%, there's much that's needed in the form of incentives and schemes, tax rate rationalization, ease of litigation, etc., to catalyze India's manufacturing sector growth. Talk to us, Mr. Sachchidanand Shukla, about what you believe should be top priorities for Budget 2023 to boost manufacturing growth.
So I think a couple of things that they need to continue to do. The first one being the focus on PLI. It has worked very well in the mobile manufacturing thing, and there is proof from Apple producing really $1 billion worth of phones that we've seen. They need to really look at maybe a few more sectors, but I think we need to realize, do we want to spread the money too thin by putting it out for multiple sectors, or we want to focus on certain sectors to achieve the desired goals of the policy? And then there should be continuity in that. But more importantly, and this is probably going to be an ongoing thing, and this budget should continue to look at, is while we keep talking about ease of doing business, one thing which remains very, very important and which the PLI is trying to address is the cost of doing business. I mean, you look at any business, especially manufacturing, the cost of doing business is very, very high. I want to give you a couple of examples. If you look at the kind of compliance burden a typical company has, right, with a 500 odd employee strength, they have about 750 compliances, 60 acts, 23 licenses and regulations. And mind you, these keep changing every single year. And then the center does it, the states do it, and then there is a multiplicity of this, which creates a lot of problem when it comes to compliance and also trying to just understand and tackle this. The second is just look at fuel and power costs. So diesel in India, even though we've not really raised these prices over the last several months, but it is still 22% higher than that in China, about 40% higher than in the United States, and about 70% plus higher than Bangladesh, right? Or 68% higher than Vietnam. And mind you, we are competing with some of these economies out there in the export market. When it comes to electricity, which again is a very key input in terms of manufacturing, these prices are higher by anywhere between 7 to 50%, depending on which economy you're comparing, right? So I think unless we address the cost of doing business, and there has to be a continuity in this process. So ease of doing business is absolutely fine. The government is continuing to do that at the center as well as the states. But I think fundamentally, if you have to be competitive in the global economy, cost of doing business has to be very, very important. The PLI is trying to give you a little bit of that disadvantage, right? So logistics, efficiencies in the entire chain. And I think lastly, we need to really integrate with the global economy and the global value chains. So what does the government do in terms of customs duties and really incentivizing us to get integrated into those value chains? So I would think for manufacturing, these remain the most important priorities going forward.
All right. Speaking about revisions in the taxation system, in addition to tax rate rationalizations to catalyze manufacturing, what other measures do you believe, Mr. E.N. Dwaraknath, the government must take to widen the tax base and provide greater tax certainty and clarifications, particularly in relation to guidance on the implementation of OECD G20 Pillar 2 solution, significant economic presence thresholds, and return filing requirements, as well as strengthen dispute resolution and litigation management for tax disputes?
Sure, thanks, Deepika. So I'll address manufacturing first, and I'll just take off from where Dr. Murthy left, right? So where Dr. Shukla left off. So when you talk about tax rates for manufacturing, yes, India does today have a very competitive tax rate of 15% for new manufacturing companies. But I think the government needs to give some thought to expanding that. Today, those rates are available only for new companies which start new manufacturing operations. I certainly think the government should give consideration to expanding that. What happens to companies that expand into significant manufacturing operations, right? Why should you have to house it in a new legal entity for that matter? Definitely, we should look at that. Second, there is a sunset on this policy till the 31st of March, 2024. I certainly think another couple of years of extension would be good for it. I mean, ultimately, this is the opportunity for the country, right? Everybody is talking about China China plus one. Everybody is talking about India as a manufacturing hub. Third, what about things like contract manufacturing, right? Here's an opportunity for the government to even cover those kind of activities. Why does it have to be your own manufacturing? As long as the country is benefiting from increased manufacturing, I believe that the rate benefit should be rewarded or should be awarded to those companies. You raised some very interesting points, and I'll talk about litigation first, and then I'll come to the OECD Pillar 1, Pillar 2. Litigation, I think, is a bit of a challenge. When I talk about litigation, I'll cover 2 points. First, tax certainty. What is the biggest thing that most foreign investors want? They want certainty with regard to any complex tax position on any large transaction that they're taking up. The government, they announced the introduction of the board for advanced ruling. That board has been in a limbo, so cases haven't really been heard. And that has hindered their ability to reach certainty with regard to their tax transaction. That is a big blow. That's something the government should catalyze once again, ensure that the board gets functioning. Secondly, the move to faceless assessments, definitely a good one. It has reduced the interaction between the taxpayer and the tax office, but it's also led to a lot of teething problems because in a face-to-face interaction, there are things you can explain. Whereas when you're corresponding with the system, it just picks up data, and then every time there's a mismatch, that leads to an adjustment. That's actually leading to a lot of difficulty for taxpayers, just increases the amount of intensity involved in terms of the back and forth with the tax office and the administration. So I think ironing out some of that will be helpful. Pillar 1, Pillar 2 is critical. Again, as I spoke in my opening remarks, alignment with the global policy, right? I think for most countries have started the process of adopting Pillar 2. In fact, South Korea has started the legislative process. Japan has started the legislative process. And I think India should also give that signal and start the legislative process. What does that mean? It means that we commit to a minimum tax rate of 15%, a global tax rate of 15% for companies. And where a company is subject to a less than a 15% global tax rate, and we can define what we mean, what size of companies we want covered, then there is a mechanism through which a top-up tax is collected either in the home jurisdiction or across the world. Simultaneously with that, India does have to make a commitment to withdraw the digital tax, which is the equalization levy, because that's the commitment given to the OECD that once Pillar 2 comes into effect, then the unilateral digital taxes will come away. So I think a path down that will be extremely helpful. Coupled with that, these significant economic presence thresholds, I think there is a lot of room for clarity in that. Right now, it applies to all transactions, all goods, all services beyond a particular threshold. I'm not quite sure that was the intent. It was really to capture digital transactions, digital companies. So I think some clarification with regard to the significant economic presence will be welcome as well.
All right. India's digital economy is expected to play a pivotal role in ushering in India's decade and cementing the country's standing as a global tech and innovation hub. Over the years, emphasis on Indian startups and sunrise sectors have only grown during the budget announcements. Still, a tech funding winter and large number of global tech layoffs weigh on India's otherwise exuberant startup ecosystem and digital economy. Against this backdrop, what are your expectations, Mr. E.N. Dwaraknath, from Budget 2023 to rejuvenate and catalyze India's digital economy and augment ease of doing business and financing for India's startups and innovation sector?
Yeah, so again, Deepika, I think there's a slew of initiatives that the government can consider for startups, right? Specifically, 2-3 of them specific to that particular industry. If you look at the loss utilization rules currently, there is an 8-year limitation, right? So companies cannot carry forward their losses for more than 8 years and set it off against future profits. Generally, as we know, startups have a pretty long runway to profitability. So I think giving them either the ability to carry forward losses indefinitely or definitely for a longer period than 8 years is something that's extremely helpful. Second, there is a change of shareholding event under Indian tax laws. And if that change of shareholding event takes place, then the losses are no longer available to companies. Now, the nature of startups is such that they require continuous funding, they take on new investors, and therefore, more often than not, that change in shareholding event is triggered, right? The shareholding changes by more than 49%. So again, some sort of an exception to be carved out for startups will be very welcome by that industry. When you talk about R&D and innovation, I think some sort of benefits to foster innovation and R&D, whether that's by way of a weighted R&D deduction, whether that's by way of a stronger patent box regime, such that companies want to innovate in India, want to keep that IP in India, will be extremely helpful. The last point, I think, for startups, again, is on the ESOPs. I think we all know startups do try to attract talent by issuing ESOPs to them. The point of taxation of those ESOPs currently, except for eligible startups, and that's a very narrow definition, is at 2 places, right? One is at the time of exercise of those options, and the second is at the time of liquidation. At the time of exercise, the employee doesn't really get any cash in hand, right? They're just getting the shares. It's only at the liquidation point when they take home the money. So that's a little unfair. And I think pushing that point of taxation for individuals who exercise ESOPs under startups to the point of liquidation is something that will also help startups to hire talent. So I think from a startup and innovation perspective, Deepika, these are the key points I can think of.
All right. India has set ambitious greenhouse gas emissions reduction targets for 2030 and 2070. So, Mr. Sachchidanand Shukla, what are some of the green tax reforms, incentives, and frameworks Budget 2023 should focus on to help India not only meet these ambitious targets, but also motivate key market players to pursue ESG compliant growth?
I think a reiteration from the budget, whether it is, say, reducing greenhouse gas emissions from agriculture or manufacturing or the entire economic activity chain, will be a good starting point. And I think this budget is very, very interestingly and critically poised to at least kickstart that march towards these goals. So as you know, this is absolutely critical for our planet, and the current climate trajectory will lead to more than 2.5%, 2.5 degrees centigrade global warming by 2100, and is leading to a lot of negative externalities. And I think it's very important if the budget takes the lead, and it's very clear from a corporate perspective or from a private sector perspective, that what it does is if the government takes a lead by way of legislation or by way of giving certain directions via the budget, it does lead to reduction in costs for private sector. It aids in price negotiations, for example. It also impacts valuations and future-proofs growth for a lot of these private sector entities. And also, I think the RBI now has a committee looking into it. All the banks are looking into it. And if one does adhere to some of these, you also benefit via better interest rates. So I think the biggest challenge is that the ESG framework needs accountability. And I think it is the government's domain to provide direction and also some framework for accountability. As you know, greenwashing and a lot of uncertainty over how to disclose, or the disclosure norms are not as transparent or consistent. So I think if the budget does take that lead, in coming up with a framework, providing transparency, consistency, and a broader thrust in whatever domain, right? I mean, it could well be agriculture, it could well be manufacturing, or the entire economic activity chain, as I said. I think that will be a great start because the private sector has begun to see a lot of value and direct benefits to these entities. So I think this is going to be a great start if they do so.
All right, coming to my last question to both of you. If there is one change you would like to see the most out of those we have discussed so far, what do you think it should be?
I would think this is probably not the time to come out with any sort of experiments, and this ties in with the point on stability being made. I think we should leave this urgency or every single budget that we've seen, right? The urge to do something big. I think this is not the right time. The global economic situation or the backdrop is not conducive. I think we should fight back this urge of doing something major in this budget or every budget, right? I think this should be a very, very plain Jane, boring sort of a budget, not trying to do too much. And we know the degrees of freedom are very, very limited. So I think the change that I would want to see is this urge of not trying to do too much or trying very hard with some fancy experiment. I would think that this is not the time.
All right, over to you, Dwarak.
Yeah, I mean, if there was one change that I could pick, I would just go with getting the tax rate to 15% for all companies across the board, whether you're a manufacturing company or a services company or a startup, you're an innovative company, just bring it down to 15%. I think that by itself can send a very, very strong message to industry. That would be my ask.
And with that, it's a wrap on this edition of ET's pre-budget conversation series. Thanks to Mr. Shukla and Mr. Dwaraknath for joining us today and sharing their views and expectations from the budget for key sectors of the economy. Thank you also to our audience for joining us today for this special pre-budget panel discussion. Don't forget to check out ET's special budget coverage on our website and on our app, where we have a series of sector-focused discussions. You can also visit our dedicated budget site, www.economictimes.com, for a comprehensive coverage of budget FY24.